Hey, good afternoon, everyone. My name is John Giminon, a Regional Vice President of Sales here at Angel Oak Mortgage Solutions. Today, we're going to do a deep dive into products. This is not going to be about the 30-something securitizations we've had. Last month, we had the largest securitization post-COVID. This is just going to be a deep product dive. So without further ado, I want to introduce one of our subject matter experts, Lisa.
Oh, hi there. Did you want me to talk about me?
Yeah, just introduce yourself, Lisa.
I'm Lisa Lee. I am an account executive out here in Utah, in Salt Lake City, Utah. I've been around here for about 4.5 years at Angel Oak. And, things I like to do out here, obviously I live in Utah, so everything that I can do outside is what I prefer when I'm out of work, and hunting and camping and going from the mountains to Moab, we get everything here, so it's the best. Hang out with my little Stevie Grace, who is my grandbaby. She kind of takes up most of my time, so that's about it.
That's awesome. And Lisa's also a top producer here at Angel Oak, and modest about that. And then I get to work here every day with Jerry Calderon. Jerry, please say hello and introduce yourself.
Hello, everybody. My name is Jerry Calderon. I'm an account executive in the Tampa Bay area. I've been with Angel Oak now for a little over 5 years. I've been in the industry now for going on 15 years. Super excited to be here today with you guys. I really look forward to making all of you non-QM experts, helping you to learn how to grow your business and obviously to build on your referral base.
Great, Jerry. Yeah, and again, I get to work with Jerry. Jerry's a top producer here, and does a lot in his community too. So I'm lucky every day to work with Jerry. So let's dive into this. So you can all see our website. It's a very easy to use website, very intuitive. And really, we're going to spend a lot of our time today is talking about the products, because we've had, since we relaunched in May of 2020, we've had 37 enhancements. So it's really critical, and I'm glad that all of you have gotten on this call and are going to spend the next 50 minutes with us learning about our programs. And before, we're going to talk about our most popular program out there is our bank statement program. But before we do that, we're going to do a poll, and the poll is going to ask you, who has originated a bank statement loan in the last 12 months? We're going to give people a few minutes to get their vote in here. Okay. Looks like a lot of you have voted, and thank you for your participation. And we always get this question on this. So this is great. So the poll results are in. We've got 70% have not closed a bank statement loan in the last 12 months. So this is a huge opportunity for us. So again, big opportunity. Usually that's around the numbers that we've seen in previous polls. So guys, we're going to let Lisa touch on the highlights of our bank statement program. Lisa, please take it away.
Alrighty, so as he mentioned, the bank statement loan is our most popular product that we see out, that we see come in actually to us. And most of our jumbos actually end up on the bank statement program as well, of course, because of successful, self-employed individuals and business owners, of course, are looking for their higher end homes. So this product actually goes to 90% loan to value with no MI, of course, on any of our loans. And it allows scores now down to 600 on those lower LTV buckets, which is great. So it opens kind of a huge wide range of lending there. So this product will allow us to go to 3 million without exception on loan sizes, down to 150 minimum. We require 2 years self-employment, whether you go 12 or 24 months. And what we allow is 12 or 24 months of business or personal bank statements to apply. And so it's all the rates are based on a 30-year fixed. It only needs 2 years seasoning from credit events such as BK, foreclosure, deed in lieu of, short sale, those type of things. On the business bank statements, the borrowers must be at least 50% owners to qualify, or excuse me, business owners. And on the personal bank statements, just 25% ownership, or of course they can be, a gig worker or some sort of a 1099 employee. This is offered on obviously owner occupied, second home and non-owner, which we just actually made another enhancement to where we'll go to 85% loan to value now on non-owner and second home, which is great. And on 85% loan to value for cash out. So that's exciting news too. So how we actually, the greatest plus about our product on the bank statement program is that we have our bank statement review team. And this is our tool that is valuable, so valuable to you and to us, because what we do is at pre-qual stage, before we even send you a pre-qualification for the borrowers, we're going to ask you to send us the income, the app, the credit, and the bank statements. We have a review team that we will send this to immediately. 24 to 48 hours later, we will have income approved for you. We will have everything established so that you can actually send these borrowers out to shop for a home confidently, knowing what they qualify for as far as their income is concerned. So we start off automatically by approving, the bank statement team will approve the income at 50%. And then depending on what type of business these people are involved with, and depending on their situation, we will then evaluate and determine what the expense ratio is going to be that we will use. So for instance, if someone has a business such as an auto dealership or something that requires a lot of expense, a higher expense ratio, we may look at assessing a higher expense for those people. Now there are other individuals such as real estate agents, etc., who have a lower expense ratio, and of course we're going to take that in consideration. On personal bank statements, we will allow up to 100% of those net deposits if the person has a separate business account. Of course, that's used for expenses for their business. So, and then otherwise, we're going to assess a sort of ratio. So, we just added last year our 1099 option. This is so exciting because, as you know, we've got a huge gig economy. A lot of those workers that have become 1099, independent contractors. This is perfect for those people. So all we require in lieu of 12 or 24 months bank statements are 1 or 2 years 1099 form, right? And year-to-date income from either an income statement from their company that they, contract through, or bank statements for the year. And so we can qualify them that way. And it's really added to just the value of this whole program. So one thing I wanted to remind you of is that we offer delayed finance on all of our programs, which is so huge right now. I know we'll talk about this more, but I'm seeing a lot of this. Up to 6 months of the purchase, we will actually, not only replenish their assets, but we will also consider paying off any private or hard money loans that they've received. No cash out hits, just delayed finance. So this really helps for those borrowers who have been really put up against the wall on tight deadlines, have earnest money coming hard, gets all the stress off of the deal, and we can get them into, replenish their funds. And we offer a 40-year fixed, or excuse me, a 40-year interest only, quarter hit. So that's it.
Yeah, no, and now we know why Lisa's a top producer. She knows it all. So, and delayed financing is critical. I mean, because, and it's almost in every market that you see multiple bids, cash offers. Well, these borrowers really do want to recoup that cash that they took out of whatever asset it was in. So great coverage there. Questions are coming in. Please, we will try to get to all your questions. One of the things we always get asked, and this is a question, is this being recorded? Yes, it's being recorded. It'll be sent out to you no later than end of day tomorrow. And if we don't get to all your questions, we will have your local account executive reach out to you also no later than tomorrow. Jerry, a couple questions coming in here. What's the DTI on our bank statement program?
So the max DTI on the bank statement program, John, is 40 over 50. 40 on the front end, 50 on the back end.
Yeah, so Lisa, people are asking, what are our turn times? That came out of the gate really early there, so really that's quick. Awesome.
We're averaging around 17 to 20 working days, just depending, and that includes, the time for appraisal, etc. So, it just really depends on, when we're getting them moving. But 2 to 3 days in our underwriting time right now is awesome for initial and, for conditions. So we are moving these loans quickly through our system.
Yeah, Michelle asked a question. I can answer it. Michelle, yes, you can. You have to order your appraisal through one of our AMCs, and I believe we have what, seven or eight now. So yeah, and that's, and we're, as Lisa talked about turn times, we're seeing that right now is the biggest detriment to closing on time, our appraisals. And And Jerry, another person asked here a little bit more about delayed financing. Jerry, just kind of give an example of someone maybe who or how you closed a loan that included delayed financing, please.
Certainly, certainly. So here in the Florida market, obviously we're pressed with time with everything that we do. So a lot of times we'll get the call and say, hey, can you get this loan done for us? And I got 7 days. Well, realistically, that can't be done. So at that point, they have the option of going and purchasing the home cash. Obviously, if it's an investor and they want to recoup that cash or leverage that cash in another way to put down in another form, then they have the ability to do so by doing their loan with us currently. So that's a great option for somebody that's in a pickle and just have to pay for the home cash. Enables them to be able to recoup their cash immediately.
Yeah, and Lisa, you covered this. The max LTV again on bank statements?
90% loan to value is our max with the 700 score. Below 700, of course, you're looking at 85, and then another bucket for below 620, 640. So,
Jerry, give an example of how the bank statements are calculated. I know Lisa touched on it a little earlier, but talk about how the income is calculated. And I think what they're probably looking for is, on business, what deposits are you looking at, and even if you could maybe explain a little bit on personal, please.
So on the bank statement program, the deposits are total. Obviously, we're going to take a look at whatever the business deposits are and total them up. It's really, really simple math that we utilize. The formula is you're going to be able to utilize 50% of the total deposits. So in the event that you have $1 million in deposits, we're going to take 500,000. You're going to divide that by the month that you're doing, whether it's 12 or 24 months, and that's your monthly income. We do have the ability to go higher if we need to, in the event that we can get a verified CPA or a tax preparer letter that lets us know what their percentage of expenses are. Obviously, most businesses or a lot of businesses don't run at a 50% expense ratio. Then we can go at the higher expense ratio as long as they provide us with a third-party CPA or tax preparer letter that lets us know what their actual percentage is, and we can go to as high as 85% of the deposits, and that would be with a 15% expense ratio.
Right. So Flavio, hopefully that answers your question there. Lisa, talk about a borrower that's self-employed and maybe their spouse is W-2'd. How do we do that?
Yeah, so we can actually, we're going to look at the self-employed borrower first. We're going to take in the bank statements for the self-employed borrower, but we can also add a W-2'd employee. All we're going to look at for that co-borrower is just, we're going to verify their income separately through W-2 and pay stubs, so no taxes, and we can add that income to it. So it works really well for those type of situations.
Yeah, so Marcus, hopefully that answers your question here. We have a lot of questions, really a lot of good. So just a kind of basic question here, Jerry. Excuse me. Who processes the loan?
So the broker processes the loan. You're going to broker the loan directly to Angel Oak. So you will be responsible to order the appraisal, obviously meet all of the underwriting conditions, and process the loan. Now, obviously, the account executive and the account manager that's assigned to the loan officer will be there hand in hand to guide you and assist you throughout the process, but you do all of the processing for you.
Yeah, and Karen, if that doesn't answer your question, or if you don't have a processor, any one of your if your account executive will contact you, they probably know a half a dozen third-party processors they could put you in contact with. So a lot of great questions coming in here. A lot of rate questions. We're going to talk about rates later on when we show you that quick quote tool that we have. We'll spend a couple more minutes asking some questions. Again, a lot about Jerry, if you want to give us, just a little bit more detail on a lot about that expense ratio. I know you guys, both you and Lisa, have covered that, but that seems to be a common question here.
The expense ratio, guys, is what's going to ultimately determine the amount of the deposits that we can utilize. Okay, that's going to be the percentage that we get for the expense ratio lets us know the percentage that we can use of the deposits. Okay, so just a simple example for you. Let's say you have a borrower that's got 100% owner of the business. Okay, they're 100% owner of the business and they have $1 million in deposits. Let's say in the event that we're going to utilize a 30% expense ratio, provided we got the CPA letter, then they're going to be able to utilize those $7,000 worth of deposits. That they're going to be able to total deposit, divide that by the month, and that's how we're up with the monthly income. But the expense ratio is very important because that's obviously what lets us know what we have to deduct from the total deposits.
Yeah.
Now, one thing I'd like to mention on this, John, is do keep in mind, guys, with the bank statement program, the borrower's buying power doubles because of this program.
Right.
Okay. A lot of times I get calls on borrowers who have been trying to go the conventional route, and maybe in the conventional world they were able to qualify for a $300,000 loan amount. Now on the bank statement program, they can qualify for a $500,000 loan amount, and we all like volume. So keep in mind that these loans do come with larger loan amounts, and you can double your volume in doing these loans.
Yeah, Jerry, that's a really astute point there. You know, Jerry's a unit producing machine, but you know, these self-employed borrowers are buying those those luxury homes. So they're not W-2 borrowers in most cases. They're self-employed borrowers. And I've got a statistic here for you. There's more self-employed borrowers than there are VA borrowers. So keep in mind when, you know, that 70% of you, and thank you for voting in our poll, that's a huge opportunity. And I've got another statistic here. In 2020, new business applications increased 24% over 2019. That's the largest increase year over year in over 10 years. So, and I don't see that slowing down. Lisa mentioned the gig economy, that 1099 bar. That segment of our society is just continuing to grow. So, so great. I know we're about almost 20 minutes past the hour. I want to be cognizant of everyone's time. So if we didn't get to your question here, we will answer every question. This call is being recorded. We will get this out to you before end of day tomorrow. So Jerry, why don't you take us through our second most popular program? Absolutely,
John. This is called the Investor Cash Flow, and it's actually my favorite program here with Angel Oak. It's a program that you guys have been and pitching it. I strongly encourage you to. This is a great program that is very popular nowadays, and it can definitely help you to grow your pipeline. The Investor Cash Flow is our no DSCR loan. It's for investment purposes only, so it can only be done as an investment property. We'll go up to loans up to 1.5 million, okay? And the minimum loan amount that we'll go down to is 75,000. So do keep that in mind that we will go up to 1.5 million. Now we have gone in some instances larger than that. We would have to get an exception in order to do so, but if we have a strong file and we're able to do so, we could possibly go a little bit higher than that $1.5 million loan amount. All of the qualifications are based off of the minimum DSCR, which is 1-to-1 ratio. Okay, we do not require any DSCR with a minimum 700 FICO score, and the max LTV would be 75% for that. We don't require any personal income or employment information on the 1003. So you are not required to disclose exactly what it is that they do for a living and how much they make for a living, because again, this is just solely based off of the DSCR that we're doing on the rent analysis, which is the 1007 that we order on the appraisal. We do allow on this program, actually all of our programs for investment purposes, we allow the property can close under the LLC's name. We have no limit on the total of properties that they can actually finance or have financed. Now we'll do as many as 4 with Angel Oak, and we have gone even higher in certain instances for that purpose. You can do this as a purchase and as a cash out or rate and term. We do have a 40-year fixed interest only available for the program. And additionally, we can do non-warrantable condos also. One thing I do want to mention with the condos is we do base the DSCR off the PITI payment. And if you have an association due, then you have to take that also into consideration for what the DSCR comes in at.
Hey, and Lisa, a question came up here from Christine. What's the max units that we'll do as far as a property from a 1 to 4? She was asking, will we go over a 4-unit property?
We will only allow a 1 to 4 unit property max. So you'd have to go into some commercial type division above 4 units. So 1 to 4 unit is our max.
Right, great. A couple other questions coming in here. Jerry, the LLC, I don't know if you mentioned this, how many individuals can be part of the LLC?
The max that you can have on the LLC is 2 individuals, and they both have to be on the loan.
Okay, and a DSCR, Jerry, tell us what, we use acronyms around here a lot, so, and I apologize for that. Can you give us what the acronym means, Jerry?
That's the debt service, that the coverage that we order. That's the 1007 that we order on the appraisal. Okay, it's the rent analysis for the market. When you order it, it has to come in at 1 to 1. So what that means is if you have a PITI payment of $1,000 a month, then the market rent analysis has to come in at 1,000 or higher, and then you are good to go, my friend.
And then Lisa, I've got a question here from, I just had it here. Sorry about that. Got to put on my glasses. Do we just use the appraisal, or will we use lease agreements?
So if they have if it's on a refinance, and as Jerry mentioned, first of all, if it's below 75 LTV and they have a 700 score, you can choose, if the rents come in low or something like that, you can waive the DSCR for a hit to the rate. But we can also use a lease agreement with 3 payments as well on a refinance only, in lieu of the rent schedule on the appraisal.
Yeah, and this is only for non-owner occupied. I see some questions coming in. Can I do this for primary? This is only non-owner occupied properties. And then still a ton of other questions coming in, guys. Sorry. Jerry, is this for first-time investors? Great question here by Fred.
That's a great question, and it absolutely is. Absolutely is. Now, they do have to own a primary residence, but as long as they own a primary residence, we can absolutely do this 20% down, depending on the credit score. So we can go as high as 80% LTV even for a first-time investor. Great question.
Yeah. And then Lisa, is there a prepayment penalty on this?
There is a standard 3-year prepayment penalty option. You'll see, once you receive your pre-qualification, you'll see the options to buy down or buy out the prepayment penalty. So it's available.
Yeah, Jerry. Sorry, Lisa. Sorry.
No, I apologize. We actually just added a 4-year prepayment penalty option to that to lower the rate, just so you know.
Nope, great question. My bad. Sorry. And Jerry, on a refinance or a cash out, does the place need to be occupied?
It does. It does need to be occupied. Yes, sir.
Yep. Talk a little bit non-warrantable, Jerry. I know you're in Florida where we get a lot of condominiums. What do you mostly see, Jerry, from the reasons why condominiums are non-warrantable?
We get a lot of questions on the non-warrantable. There is a lot of things that we can do, but there's certain things that we have hard stops with on the non-warrantable side. For instance, 100% investor concentration, we do not care about. So if you have a building that's mainly investors in the building, that's something that we don't have any issues with. If they aren't able to meet the minimum budget and reserves requirements, we can still do the loan. We may have to lower the LTV depending on what the reserves is that they currently have, but we can still do the loan. Litigation is something that comes up quite often. There are certain hard stops if you have some structural damage or something that has to do in litigation that has to do with the building itself, and that's going to be hard to get around. But if you have something litigation-wise where it was a simple fix, then that's something that we could also do on the non-warrantable side.
Yeah. So Lisa, how about VRBOs and?
So unfortunately, we still don't offer anything for condo hotels or nightly rentals. So, we're going to be looking for full, a long-term lease, comps as well. So, but we do not allow any condo hotels as far as the non-warrantables concerned. So.
Yeah, Brad, sorry about that right now. So, but again, I mentioned it, if you weren't on the beginning of the call, we've had 37 enhancements, and Jerry's going to talk about one regarding this investor cash flow here in a minute, but I just want another stat that I read the other day. 17% of the purchase market right now is investors. So people are investing in real estate heavily this year. And I know during the summer, the FHFA implemented some overlays that 7% of your portfolio couldn't be more than second homes or non-owner occupied. And they added loan level pricing adjustments to those. They temporarily have lifted those. Rumor has it that could be coming back. So get comfortable doing non-QM or investor cash flow or the DSCR, debt service coverage ratio program. So and Jerry, another question here before I let you get into the recent enhancement on this is there a max number of properties the borrower can have?
They can have as many as they want.
Yeah, so you're taking a borrower and all we're doing, if they have 50 properties, all we're doing, we're concerned about that subject property. That's it. You don't have a borrower coming in with a foot, 2 feet of paper, lease agreements or anything. You don't need anything on those other properties. We're just going off on how this subject property cash flows. So Jerry, talk about the enhancement we just added about a week ago to a borrower underneath this program, our foreign national.
Yeah, so we just got our foreign national program back, and it's bigger and better than ever. With the foreign national program, now we can go to as high as 70% LTV, and it's now a DSCR loan, just like the investor cash flow loan. They do have to live outside the U.S., but all the qualifications are going to be based off of the DSCR, the rent analysis that we're going to order on the appraisal for the program. There are acceptable visas that they must have, and then there are some visa waivers that we have, exception visa waivers that we also currently have for the program. Like I said, we can go all the way up to 70% LTV, and it's a DSCR loan. That there's no employment information necessary for the program itself. No income also.
Yeah, this was a fairly popular program, and I love the way we rolled it out underneath this debt service coverage ratio program. And then Karen, we're going to talk about rates here when we get to the end near our quick quote tool. So or near the end and show you our quick quote tool. So we're a little past half past the top of the hour, so half past the hour, whatever. We're going to get into our full doc programs. Lisa, we're going to talk a little bit about our platinum program.
Yeah. So our platinum is our non-QM jumbo product. So basically it's for the just missed borrowers that have for some reason fallen out of either a prime jumbo product or, you know, your high balance stuff on the conforming side. So this program actually great. It allows you to go to 95% loan to value with no MI, of course, and then of course no prepayment penalty unless it's an investment. But and we'll go down to a 660 score. The platinum product again allows you to go to 3 million loan size without an exception, and so that's great for these borrowers. It looks for 4 years seasoning on foreclosure, deed in lieu of short sale, those type of things, and all types of properties as far as primary, you know, second home and non-owner. Great addition to this one, as well as what I mentioned on the bank statement is now we'll go to 85% loan to value on non-owner and second home. So that's a great addition to this. As well, we will go to 85% cash out now too. So, and we've increased while I have that cash out up to 1 million without exception below 60 LTV. We see a lot of that. We have a lot of people coming in to get cash. So anyway, it's a great product. It also offers that 40-year interest only. That's you know, an ad for really aggressive payments for people. And we have a 1-year tax return program that's offered on this as well. So it's non-warrantable condos. Again, we can do non-warrantable on all of our programs. So that offers that too. So it's a great bar. It's full doc only. So.
Yeah, it is a full doc only, and as Lisa mentioned, that 95% one loan, no MI is big. You know, you don't want that borrower. You know, if they're taking assets out of the stock market, you know, whoever their money manager is, or they just don't want to take that money out of a stock market that's moving in the right direction. You know, only 5% down, I think is a great feature there. So, Jerry, talk about our other full doc program here, Portfolio Select.
Portfolio Select, John, this is what I call the Band-Aid loan. So this is for that borrower that just had some sort of a recent housing event or a bankruptcy. That's what you would think of the Portfolio Select program. The credit scores go all the way down to 600 and will go up to as high as 90%. LTV, again, that's one loan with no MI, which is huge. We'll go up to loans up to 2.5 million. 1 year seasoning for foreclosure, short sale, or deed in lieu. There is a 2-year seasoning for a bankruptcy. We can also do purchase and cash out or rate and term refinance on the Portfolio Select program. We can also do owner occupied second homes and investment properties on this program. Once again, we are able to do non-warrantable condos on the program, and the max DTI on the program is 50%. We do allow gift funds on this program. We allow gift funds on quite a few of our programs. And then you also have the 40-year fixed interest only option available in this program, along with the non-warrantable condos that are allowed also on the program.
Yeah, Jerry, great coverage there. You know, a couple of things I do want to point on are, you know, that gift funds, just keep that in the back of your mind. If your borrower maybe doesn't have that 10% down, all we require is 5% of the borrower's funds, and the other 5% can be a gift. So, Jerry, I'll go to Lisa on this. You know, a lot of people have asked about reserves. What are our reserves on this program?
All of our programs just require 6 months reserves.
So again, you know, just think about if they don't have that all they have to do is have that 5% of their own funds, and the other 5% can be a gift. So Jerry, great job there. We're gonna, I think Lisa,
one thing on this program, real quick, one thing to mention, guys, keep in mind on the Portfolio Select program, like I said earlier, this is a Band-Aid loan. So you're going to be able to get your borrower into the home. You're going to be able to get them the financing for the home currently, and you're hopefully going to get them into an agency loan once they're able to qualify 2 or 3 years down the road. So it's a 2-for-1 deal. It's a no-brainer to go out there and pitch this program.
Yeah, Jerry, we're starting to see our own little refi boom, right? I mean, people, Jerry's been here 5 years. I've been here over 7. We're seeing borrowers that were put in these loans 3 or 4 years ago. Now they've got the appreciation in their home, their credit's clean, they're refinancing them into an agency loan. So this is, you know, Jerry says it is truly a 2-for-1 loan, as long as you are staying in touch with that borrower and helping them as an advisor to them and getting their credit cleaned up. So great point, Jerry. This is really where you, as the LO, you know, you're basically creating your own refi boom. So I think, Lisa, you're going to touch on our asset qualifier program, which is another program. Just again, these are just additional tools to keep in your tool chest. So let me get here. Lisa, if you want to cover our asset qualifier program.
Yes, so this program is excellent for those high-end borrowers or borrowers that just have a ton of assets but cannot or choose not to verify their income and employment for whatever reason, whether they're, you know, retired trust babies, they have a ton of, you know, businesses, whatever the case may be. This is a no income, no employment, no DTI product for primary residents only. So we have the investor cash flow for our, you know, investment products. This is actually for your primary residents. So again, there's no income and no employment verified. All we look at are the combined assets, and the assets, basically this will go to 75% loan to value, 700 FICO score and above. It can be done on a purchase or a refinance. And what we're going to look at is 6 months seasoning on the assets. They must be in their personal names. We're going to ask for just one most recent statement of the asset, and then one statement from 6 months previously or previous to, just to confirm the you know, the seasoning of the funds, that they just didn't fall into it. But it also allows you to, you know, it kind of goes by all of the other guidelines of Platinum. So you're going to see up to a $3 million loan size. You know, you can get into all at 30-year fixed rates. It does require 5-year seasoning on a BK foreclosure, deed in lieu of short sale, those sort of credit events. And you can still do the interest only on this product as well. So basically what we're going to look at, the minimum requirements of this, we have a calculator that we use to calculate what they're going to be required for down, depending on, all the different assets that they can use. But basically the minimum is we're going to look at 500K post-closing plus, they're down and stuff like that in reserve. So that's basically the minimum requirement for this. So, but it's a great option for these borrowers.
Yeah, we hear a lot of borrowers, maybe it was a divorce settlement and, that spouse isn't working but they did get a payout, or, someone sold a large company and they have a non-compete. So just think of those things as you're, having conversations or trying to pre-qualify a borrower agency-wise, and don't say no, because these deals, one of the things I wanted to bring up, these deals are getting done, because these borrowers have been told no so many times. They're actually coming directly to us. So, and we will turn around and, put them back with people who know how to close loans with Angel Oak. So, these borrowers, they're savvy as all get out, not just the asset qualifier. You have your self-employed borrowers, you have your bank, your investors, they're getting done. Jerry, one of the questions was a follow-up. Gift funds, are they all, and this is shame on me, are they only for owner occupied, right?
Correct. Yes.
Yeah. So hopefully, I think that was Darren. Darren, hopefully we answered that question for you. So, guys, again, this is being recorded. If we don't get a lot of great questions here, some of them we can't get to, we will have your account executive reach out to you and get your question answered for you. Jerry's gonna take us through a great tool. A lot of you people everyone was asking about give me your rate, give me your rate, give me your rate. We're gonna show you a very quick tool. Lisa and Jerry are always available, but for that 1 hour of sleep they get a night, you can get rates anytime you want, any time of the day, any day of the week. So Jerry, give me a scenario let's price a couple scenarios out, one for bank statements and let's do one for investor cash flow.
You got it. So the quick quote is awesome because I'll tell you, it's very user friendly. And when I actually interviewed with Angel Oak, this is one of the pitching points that brought me here, because it was so I love the quick quote. You get on there and you do not need a user ID or password just to price out your loan. So if you get a call on a Saturday or Sunday and you just want instant pricing or want to know if your borrower can go up to a certain percentage in LTV, then you can hop right on here and get it done ASAP. So let's just start, John, let's go with a loan amount of say 400,000. And for this scenario, let's price it at a 700 middle score. And let's go to an 80% LTV. Housing history. So here we're going to leave it at 0 times 30. Property type, obviously, like Lisa said, we'll go up to a 4-unit, but we'll leave this one at 1 unit. Purchase transaction type. So we're going to do this one as a purchase. Income documentation, here's where you would put the type of income, whether it's bank statements, whether it's going to be the no DSCR, full doc. But for this one, let's go 24 months business bank statement, John.
Yep.
And it's going to be owner occupied, U.S. citizen, and then the lock duration, you can always just leave it at 30. And you'll see right below that where it shows you the rates and programs, and it's going to tell you the bank statement program is what's available. The LTV that you requested was 80%, but you can actually go to as high as 90% on the program. It does give you the par rate of 4.5. Tells you that the bankruptcy seasoning is 24 months. Lets you know that housing event seasoning is 24 months. That you need 6 months reserves. And all the way down to the very bottom, you'll see in the box, we have some of the general guideline specifics for the program as far as minimum loan amount, trade line requirement, and things of that sort.
Yeah, so this again, I didn't know this brought you here, Jerry. I thought it was me, but no, but this is a great tool. And again, if you get something on a Saturday or a Sunday and your AE is not available, this is a great way. This is a 30-year fixed, and it is a par rate. So just be cautious about quoting a par rate, because Jerry or Lisa, let's talk about, before we get into an ICF scenario here, Jerry, Lisa, talk about, we've seen some loan officers on this call, how are they getting paid, Lisa? Talk about how we price loans, whether it's borrower paid or lender paid.
Yeah, so we do offer both borrower paid and lender paid options, just depending on what their, what their particular broker. I'm echoing, I apologize. I'm not sure where.
You're good.
So anyway, we offer both borrower paid and lender paid options and it just depends on how the broker signs up with us as far as their LPC is concerned. Basically the pricing is half to 1. So if someone signs up, it's really simple to calculate. But if you choose to go lender paid, we give you all the options available on the quick quote, or when you submit for a quick qual, we'll send it back to you with all of the pricing options available for lender and borrower paid. So on lender paid options, for instance, if you choose a 2% lender paid, you can choose to put it all in the rate and cover it all in the rate. You can choose to have it all up front in discount fee, or you can mix it up to where you do some in the rate and some in discount fee to cover your LPC. If you go borrower paid, we are not required to regulate the LPC on borrower paid. So if you have a really large loan amount or you need to do some negotiation, it's up to your company, but you can decide what you would like to charge in origination fee. Whatever you want to make, you need to make in origination fee, but then you can actually do a lender credit by adding to the rate. The rebate will then show as a lender credit towards the closing costs and origination fee. So you can do either way.
Yeah, great. Yeah, again, working with Angel Oak is easy. Not just these tools, but how you get compensated is really easy. So Jerry, let's go through let's do a investor cash flow pricing scenario, because obviously it's our second most popular program.
Okay, let's do investor cash flow. Let's go with a loan amount, let's say of $250. And then for the purposes of this one, let's do a 720 to 739 credit score. Most of these investors have great credit. Your loan to value, let's leave it at 80% on that. We're going to do this as a 1-unit purchase, and let's now under the income documentation, we have to switch that now. And we're going to switch that over to the investor cash flow DSCR. And we have to also switch the occupancy type to investment, because obviously this program's only done on investment properties. You can leave it as far as the U.S. citizen and 30-day, and then you'll see the rate in the program below. You'll see the investor cash flow. LTV requested was 80%. You are maxed at that 80%. The par rate for a no-doc loan is 4.875. 48 months is your seasoning for bankruptcy. Housing event seasoning is 48 months. Your reserves is 6 months. And then, like I said earlier, below that, we'll give you some of the program specifics additionally.
Yeah. I mean, that's almost silly. You got a rate less than 5. You're not providing any job information or any income information or tax returns or lease agreements or anything like that. You got a rate of less than 5 on a 30-year fix, just qualifying that borrower off how that property cash flows. That's pretty easy right there. So, yeah. And then, as Jerry mentioned, there's some additional, the standard 3-year prepay. There's all your adjustments to pricing and stuff like that. And Lisa went through, the borrower paid and the lender paid option. So just be cognizant of that. And obviously, those are going to be some really good conversations. So, Lisa, I'm going to have you take me through. Eli, I hope you're still on here, Eli, because I think this is going to, I know you said you wanted to send this out to maybe a realtor group. We're going to show you something even better. So just bear with us here. We're going to log into our website. As Jerry said, when you're using Quick Quote, you do not need to have credentials, but to access our marketing portal or submitting a loan to us, you are going to require login credentials, and get with your AE and they can get that for you. So, so this is our portal. Lisa, just take us to a few marketing highlights here.
Yeah, this is excellent. I mean, people go crazy when they realize what we have to offer here for the marketing tools. You guys sell a million products out there. You're promoting everything. We do one thing excellent. We have the best marketing team there is on the planet, and all we market are non-QM. That's what we do. So use our tools. We've written it. We have the verbiage. We have the sales pitch. We have it right here all for you. and you can customize it. So there's no Angel Oak stuff. So what you'll do is you'll log into the portal, and once you go into our underwriting portal, you'll see here the marketing portal up top. Click on that. We have everything available as far as, first of all, we have a presentation. It's our deck that we use that you can customize for you, cut and paste to use whichever slides you want to use, and create your own presentation for your brokers. We're always happy to do it with you and go to those presentations, but if you want to do it on your own, go for it. And the other cool part is it has a realtor flyer so that you can actually promote the event and let them know when they're coming, send it digitally or whatever. So it's awesome. And like I said, this is
Lisa, I'm just going to interrupt you, and I apologize. So Eli, I know you said you'd want to send out this video or the recording of this to your realtor. You could have Lisa or Jerry or whoever your account executive is present on your behalf. And I'm telling you, it's one of the most powerful presentations. They show up, they don't say anything about Angel Oak. They just tell you, hey, we're just one of Eli's investors. And they talk about the program. They answer the question. Anyone who's done one of these for one of their LOs, I promise you, you will get a loan, and it will be from one of your realtors. I promise you, you will not be disappointed. Sorry, Lisa.
No, that's great. That's awesome. But we also offer, if you're marketing a lot on your social media, posts or whatever else. So we offer the whiteboard videos, the social media posts. All of this stuff is amazing. Look, we've redone. I mean, they're just really sharp and really bright. They show up incredible on any social media post, and we offer it for everything. Here's the asset qualifier, the bank statement program. We've got them all available for whomever you're going to decide to market to, that week, that day, whatever you're doing. So we also have flyers for everyone, including, CPAs and financial, people. We have Spanish speaking flyers as well. All of these tools available for you, and all you need to do, there's also instructions on how to fill in, but here is what it looks like. So basically, that's the end result of what it looks like, but you can create, drag and drop your own logo in there. You can add all of your personal information, including any disclosures that you need to add, the equal housing letter and yada yada, all the states that you're licensed in, etc. So everything is covered for you, and all of the legal stuff as well that you need to add as far as disclosures. And once you save this, if you wouldn't mind clicking on that drop down, to show them where all the bank statements are, to select a flyer. I'm sorry, John. Yeah, so once you create one, you can save all of these different flyers, and it will have your information already created once you've plugged it in. So it's really great. It saves it to everything. So it's a really cool tool.
Yeah, we've done all the work for you, our marketing department, and if you were able to see it, get with your account executive. They will take you through this in great detail. Are those flyers, those social media posts, we've gone into the details of, you want to market to a borrower or do you want to market to a realtor? This is all done for you. Please take the time. I promise you, you will grow your business. We're starting to see a little on that agency refi slowdown, the 10 years going up. Don't miss out on business that's out there. As I mentioned earlier, there's more self-employed borrowers than there are VA borrowers. So, and 17% of the market, of the purchase market, is investors. Please don't miss out on that business you can catch or you can capture. And the great thing about it, we've got over 80 account executives across the country that will partner and help you grow your business. There's not another non-QM lender out there that can do that. I promise you that. So we're coming up, we're about 10 minutes before the hour. Jerry, Lisa, I'm going to let you guys give a couple of closing things. If I've forgotten anything, please, feel free.
The only other thing I was going to mention is that, we talk about gift funds, and an alternative to gift funds is that we only require 30-day seasoning of funds, to become there. So, if you can supply a 30-day, the most recent statement, that's what we look at for funds. So that helps out a little bit because we're not requiring 60 days of funds, yada, yada. So that kind of adds to that as well. But I did want to tell an experience I had on an ICF loan. We don't actually do a lot of ICF. I don't do as much as Jerry does. They have a lot over there too. But anyway, we do a lot of big investors that are seasoned, that have a lot of properties, but it's kind of like an ultimate dream and an American dream to grow your your portfolio and buy investments. And I had a borrower who had just been tossed around the ringer, and he'd been through a bank, and just everyone was trying to cram this square peg into a round hole for this guy. He had saved up a lot of money, relatively speaking, for himself to purchase an investment property. And he was put up against the wall even before he signed the contract with tight deadlines. And he was ill-advised to put a lot of money down with earnest money, really high stress. By the time we got the loan, it was already maxed out with stress. Like, everyone was stressed out. And no one bothered to really tell him, or they're so busy that they kept trying to make his income work and trying to make it work and trying to make it work. And it was just not going to work. So he got to us. We were looking into delayed finance options, or his broker was. In the meantime, we were able to stay the seller enough to get this loan closed successfully through an ICF loan, or debt service ratio loan. No income, no employment, no DTI. It was $10,000 hard earnest money for this guy. That was a lot of money, and it was upsetting that he had spent this money, saved it to buy this investment, and he was overwhelmed that we could get this loan closed in 3 weeks for him, and save his money and get him into this investment property. He sent a really kind letter about the broker and about us being able to get this deal done for him, and it meant a lot to him and his family to grow their lives. So it was awesome.
That's a great story, Lisa, and Angel Oak's lucky to have you on our team. So thank you. We really appreciate it. Jerry, any last closing comments here?
One thing I want to bring to you guys' attention is you got to keep in mind that every single one of our loans is a manual underwrite. Okay. And with that being said, with the manual underwrite, it's common sense underwriting. Okay. We do have guidelines, but I would say less than 50% of our loans fall into those guidelines. As an account executive, that's what I'm here for. That's what Lisa's here for. I think Angel Oak has the best account executives throughout the industry. And one thing we are very good at is helping you structure your loan and finding a way to make that loan happen. We're going to turn every stone that we can and make sure that we're able to find a way to make the loan happen with the manual underwrite if it makes sense. And if it doesn't fall within our guidelines, we have the option to send it to our non-agency department, which is essentially our exception desk. They're able to go in, take a look at the loan, and if it's something that they like and it makes sense, we'll do the exception all day long. And we do deals like that on an everyday basis.
Yeah, Jerry, you hit the nail right on the head. In the beginning, I said I wasn't going to talk about our securitizations or our vertical integration. What Jerry just said, that's why Angel Oak can do what we do. We are vertically integrated. Our capital part of our company buys all our loans. We know the decisions we're making. You're not going to get a clear to close, and then all of a sudden someone has to turn and show it to a different investor. Jerry, as he said, he's getting any exceptions done up front. The income is calculated for you up front. No one's going to put your reputation and your referral sources at risk. No one here. And as Jerry's mentioned and Lisa mentioned, they're the best in the business. They are top producers, and all of our account executives are great and well trained. So without any further ado, I want to thank everyone for their time today. Hopefully you found this, hopefully you can use this to help grow your business. And please, please reach out to your account executive. They will do anything on your behalf to help you grow your business. On behalf of Angel, if you haven't closed along with Angel Oak, I hope you do in the very near future. If you have closed along with Angel Oak, we really do appreciate your business and look forward to seeing you soon. Thank you, everyone. Thank you, Jerry. Thank you, Lisa, for taking time out of your day. We appreciate you guys.
Thank you.
Thank you.